Today we check out some hops.
You aren't going to make me bring out Rex the bunny again, are you?
No, Jen, I've given up on teaching accounting to your menagerie of animals.
Today we're going to discuss how to account for inventory. I'm Jen Nicholson.
And I'm Blair Cook. And today we're at a brewery. Beer.
I prefer wine myself.
Shh. Are you trying to get us kicked out of here?
It beats the library, so that's a start.
Yes, it does. Yes, it does.
Okay, stop salivating, Blair. Let's get you a beer.
One step ahead of you,
Let's focus on the inventory, shall we?
if we must.
Yes, we must. Let's begin with the most rudimentary element of inventory, and that is...
Raw materials?
Very good. Glad you are still sober.
Funny, Jen. Raw materials are those ingredients that go into making beer. The hops, the barley, the water, the bottles, the packaging.
Companies will set a production plan that will dictate how much of these raw materials it will need to procure to meet the production schedule.
And these raw materials get recorded in the books as a debit to inventory and a credit to either accounts such as payables or cash when they are received from a supplier.
And once those raw materials are put into the production process, they transfer from raw materials to work in progress.
That's right, Jen. And process costing is used when a homogeneous product, like a beer, is being manufactured.
Job order costing is another type of costing system that is used when there is a variety of different products being made.
For example, if we were a home builder and trying to track our costs by location.
Yes, that's a good example. Process costing is less specific with trying to attribute the raw materials to each bottle of beer. Instead, we just assume that the cost of every bottle of beer is the same.
And the same can't be said for every house built.
Exactly, which is why each raw material consumed by a housing project is tracked individually.
So the beer ferments for a while. What happens when it's bottled?
At this point, the beer is bottled or put into keg.
And at this point, the cost accounting records would reflect that the inventory becomes finished goods and is no longer work in progress.
And then it is available for sale.
Exactly. But we aren't done yet, are we, Jen?
No, we are not, because we've only talked about the raw materials.
We also need to talk about the direct labor and overheads that go into the production of the inventory.
Direct labor refers to the workers that are directly responsible for maintaining the kettles of beer.
Kettles, is that what they're called?
Sure are.
For your house building example, that would include any of the carpenters that are working on the site. These represent direct labor because their costs can be directly attributed to the conversion of raw materials to finished goods.
There are other costs that can be directly attributed to the conversion of raw materials that aren't labor related.
For example, the electricity costs or the cleaning costs between batches. These are overhead costs that can be traced to each batch of beer.
Or in the case of a home builder, the cost of equipment rentals or gasoline used by the generators at the site.
These are variable overhead costs because they vary with the level of production and can be directly attributed to the conversion of raw materials into finished goods.
But often there are other people that are indirectly involved. For example, the supervisors and the production manager.
And then there is all those costs like insurance on the building and repairs and maintenance on the plant that can't be directly attributed to any particular batch of beer.
These are called fixed overheads.
And because they don't vary with the level of beer brewed,
Or the number of houses built.
these costs are also included in the cost of finished goods.
But how do we determine how much to allocate to each batch of beer?
Well, we look at the normal operating capacity of the brewery and then spread that overhead over the number of bottles or cases of beer produced.
So if there is $1 million of plant overhead and we produce 2 million cases of beer per year, we would have 50 cents per case of fixed overhead added to the cost. That's a pretty good deal.
Nice math, Jen. Nice math.
And more than just a pretty face.
So let's see what we've got. We've got the cost of raw materials plus the cost of direct labor and overhead plus an allocation of fixed overheads to determine the cost of a case of beer.
And because we are using process costing, every case of beer will have the exact same amount of cost allocated.
And for our home builder, which used job order costing, the raw materials, direct labor, and variable overhead will be specific to each house built.
The fixed overheads still get allocated across all the units of production.
That is, unless activity-based costing is used.
Oh no, you don't. Have another drink. That's enough for this episode.
Okay, you win. We'll cover that topic in a future episode.
That's all for now.
See you tomorrow.
Direct labor refers to the workers that are directly responsible for maintaining the vats of beer.
Vats? Is that what it's called?
I don't know.
Their costs can be directly attributed to the conversion of raw materials to finished goods.
It's way too fast.
Way too fast. Like, seriously.
There are other costs that can be directly attributed to the conversion. It's too fast.
Still going too fast.